Well, it's been a crazy few weeks in the markets, to say the least, and we thought we'd use this opportunity to address some of those issues and kind of give our views of what to expect going forward. So a few weeks ago, we had jobs data in the US, which was very poor, and the markets really kind of moved towards a recession type of environment. Bond yields fell very sharply, stock markets fell very sharply, and so when bond yields fall sharply, it means that it's actually kind of gaining. So we saw bond yields of the 2-year go under 4% for the first time in many years. And then to exacerbate the whole situation, we had the yen carry trade starting to unfold as well because of the Japanese central bank increasing rates. So we had that kind of perfect storm of worries about, is the US going to recession? Will the Fed have to have an emergency meeting to increase, to reduce interest rates by 50 basis points? And the carry trade unfolding and no one knowing how deep that fall would be. Fast forward to today, and if you kind of missed all the markets, then you would say, what was all the noise about? Because we're back to where we were virtually. I think there's a number of things. One, I don't think the US is going, hurtling towards a recession. That's the first point. We've always been very clear that we expected a September interest rate cut in the US to avert the kind of problems in the job markets going forward. So that's the base case. Now, the question is, will they do 25 basis points or will they do 50 basis points? And I think this is where the market's going to focus in on, because if it's 25 basis points, those worries will be lingering about jobs data and will the downturn in the US economy start to speed up? We definitely know it's going to be 25 basis points. The question, will he go for 50? I think one of the good indicators we could see is in the next week or so, there'll be the central bank finance ministers meeting in Jackson Hole. It's a yearly event, and the noise is coming from there. The narrative, I think, will guide us in terms of whether we're going to be seeing a 50 basis points or 25 basis points. So that's the first point. Regarding the Japanese currency, we do expect that will continue to appreciate, maybe a little less aggressively, given the turmoil it kind of had in the markets, and that's what the central bank has already kind of indicated too. Now, whether the carry trade is fully over, I mean, you see lots of reports saying that 70% of the carry trade is over. The unintended consequences of borrowing in yen and then buying other assets, I still think has to play out, and we don't know where all of this money's gone. So I'm a little bit more cautious on that carry trade, particularly if the yen continues to appreciate, at a faster rate than it is at the moment. So those are the two factors. We think the US is not going to recession. We have always said that we expected a September rate reduction by the Federal Reserve. So those two are in place, and we don't see that hard landing happening so quickly. So what should we look out for? We have some inflation figures coming out. We think inflation is not something to target for investors. I think it's going to be jobs data, and I think that's what the market's going to be looking at. So expect more volatility. I haven't mentioned about the potential geopolitical problems between Iran and Israel. That may or may not play out in the near term. So more volatility. I think come September, I think we'll get a clearer picture. But for the time being, market's saying, we had a bit of a scare. It's okay, and we're back to normal.